Good afternoon, everyone. My name is Francisco. I am an investment banking and systematic trading professional. I collaborate with different think tanks in the field of investment banking innovation as well as fintech. And the goal of this presentation is to highlight the future of the investment industry, which very likely will be based on systematic asset management. As always, I start with the disclaimer. So this is not investment advice. This is not financial planning. I'm not affiliated with any of the investment firms that I will present right now, and this does not represent my employer. So starting with the content, as you may know, the investment industry is divided into two principal schools of thought: systematic and discretionary asset management. Systematic strategies rely upon sophisticated algorithms and statistical models, whereas discretionary approaches are hampered by the biases and inefficiencies of human judgment. Empirical evidence, again, not my opinion, but empirical evidence demonstrates that algorithmic asset management surpasses its discretionary counterpart in terms of Sharpe ratio, offering a more efficient risk-adjusted return profile. How can we compare discretionary and systematic asset management? How can we compare different investment opportunities? Well, we do it by focusing on the 12 KPIs established by the CIA Association. Not just compounded annual growth rate or IRR, but the 12 of them. Incorporating algorithmic asset management into one's portfolio enhances critical metrics such as Sharpe ratio, kurtosis, and compounded annual growth rate, while simultaneously reducing maximum drawdowns, skewness, and overall volatility. Again, this is an empirical fact, it is not an opinion. Systematic asset management, widely employed in managed futures, exhibits remarkable resilience during economic downturns and recessions. For instance, it thrived during the financial crisis of 2008, a period when much of the investment industry faced significant losses. Over a 20-year analysis, managed futures have consistently demonstrated superior Sharpe ratios and smaller minimum drawdowns compared to discretionary approaches in traditional equity investments. Delving deeper into the KPIs promulgated by the CIA Association, the HFRI Macro Systematic Diversified Index emerges as a standout performer, showcasing higher Sharpe ratios and maximum drawdowns than traditional discretionary strategies in equities and fixed income. Obviously, while systematic trading entails risks such as transparency risk, model risk, liquidity risk, lack of trends risk, regulatory risk, capacity risk, it is my firm belief that the potential rewards far outweigh these challenges. So accredited and institutional investors seeking exposure to systematic trading may consider various investment vehicles, including commodity trading advisors, commodity pool operators, quantitative hedge funds, fund of funds, structured products, and UCITS. So for further exploration, I will include links to EASE and Barclays Hedge in the description. So these are databases of alternative investment vehicles, and in these databases you can check these CTAs and quantitative hedge funds that I am including in the presentation, as the regulator doesn't allow me to directly write links to the firms. So let's start with the systematic CTAs that I would like to present as the role models of systematic asset management. So let's start with AQR Capital Management. Dune is my favorite investment firm ever. 40 years, nearly 50 years beating the S&P 500 with the same trading algorithms, the same trading models. They haven't changed them. Transrent, of course, Winton, Aspect, Capital, Campbell. So these are all CTAs. You can find links to IESE so that you can track the returns and the KPIs of these CTAs. Then regarding quantitative hedge funds, Bridgewater Associates from Ray Dalio, many people don't know that Bridgewater is a quantitative hedge fund. It is fully systematic. Quantitative investment management, Capula, Alpha Simplex, SquarePoint. In general, if you would like to follow the returns of systematic funds, you have the option of following Mount Lucas Management Index, HFRI Macro Systematic Diversified Index, CTA Index, CTA Index, BTOP50 Index, and CISDM Index. I follow the markets and I can offer introductions as I am very well connected into the systematic trading space, but I do not offer any kind of financial advice. If you are interested in systematic trading, feel free to contact me via LinkedIn. And thank you so much. Have a great day.